Oh, there it is. Boom. Okay. Well, I think we have a bad USB port or something because I have to reset it. There we go. Good morning and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. We are late today. Usually the show starts at 9:45 a.m. Central. Today it's 10:30 a.m. Central, and that is because I've been up all night and just trying to create content and get things going for you guys. We are adding even more content onto the secondary channel, which is called Blind Run. You can find it by going to the main page on this channel and then scrolling down and clicking over there. There's clips from the Twitch channel, which we are streaming on every day this week and next week from 6 p.m. Central to 10 p.m. Central. We are also trying to do more live content on Locals at sonofatech.locals.com, exclusive live content over there for supporters. But being a member over on Locals is free, so make sure you go check it out. And then if you see content that you would like to access, of course, you can sign up for $5 a month. Today, we have a lot of stuff to talk about, and I have to kind of blast through it if I want to make it to jiu-jitsu on time. So I'm going to apologize if we don't have time for questions and answers at the end because we just have a ton of stuff to talk about. Global inflation rates are absolutely insane, as high as 211%, depending on your geographical location. And my question really is how is that going to affect Bitcoin? And it gets even more interesting when we start talking about the price of minting a Bitcoin decreasing. And what I mean by that is typically, what we would expect to see if we were expecting the principles of crypto to hold true and Bitcoin in general with the white paper is that there would be some sort of hedge against inflation with Bitcoin. And with rising energy prices, you would expect miners to also be having to sell at a higher price, but this doesn't seem to be happening. We're going to be talking about that though. It's extremely interesting. New bottom for Bitcoin is in. We're going to also be talking about more miner stuff, problems, and so on during the bear market. Which miners are winning, which miners are not winning as far as the large ones go for Bitcoin. We're going to be talking about Celsius and their bankruptcy. They are also claiming bankruptcy on the mining side of things, so that's going to be extremely important. Texas Bitcoin miners are also getting paid to shut down. Then we have updates from Raptorium, who has doxed themselves. Firo, who has gone up almost 200% in price. And then we also have a really interesting project from Komodo, actually being built on Komodo, which is supposed to apparently make NFT rights legal in the real world. IRL legality for NFTs on Komodo. That's pretty incredible. Beam did pump yesterday. We figured out why that was. It was due to a hard fork. We'll briefly cover that. And then we'll also, of course, cover whatever tech news that's come out. There's not a lot, but NVIDIA is prepping more price cuts for their high-end GPUs. I'm getting through this with some BBT coffee mug. Actually, the coffee was made by the wife. The mug is from Bitsby Trippin', the mining OG here on YouTube. Make sure you go give him a follow. And a sub. He is building a Bitcoin mining farm right now. Lots of interesting information coming from his channel. Let's get into it right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. Welcome back, everybody. Remember, Super Chats are never required. The first to be answered during Q&A, and Super Chat stickers boost the algorithm, so I highly appreciate it. And the best way to support the channel directly is at sonofatech.locals.com. Don't forget to hit that like button too. We have 127 concurrent viewers and 20 likes. So if we could get that to about 60 likes, I would be pretty happy. Starting things off, we have NVIDIA prepping price cuts on high-end RTX 30 series graphics cards. This is a 3090 Ti drop to $1,500 US and a 3090 drop to $1,300 US. The 3080 Ti is actually going to be only $1,099 US, and the 3080 is supposed to drop under $800 US. And this is obviously more than likely due to the upcoming launch of Ada Lovelace in the RTX 40 series. If I had to take a guess, that compounded, of course, with the GPUs flooding the market as people get out of GPU mining for crypto. NVIDIA is reportedly prepping a new price cut for its high-end GeForce RTX 30 series graphics card, which will be hitting retailers this week. The report comes from BenchLife, who have managed to get a list of the new MSRPs from the top-tier Ampere lineup. Over the last couple days, we have seen a massive price drop on graphics cards. These not just include the NVIDIA GeForce graphics cards, but also the AMD Radeon lineup too. The huge price drop comes as a reaction to the crypto crash, which has resulted in a huge amount of used GPUs flooding the market, and also the fact that the next-gen graphics cards from both manufacturers are going to launch in the coming months. And AMD and NVIDIA won't want to sit on stockpiles of current-gen inventory, which won't easily sell once the new generation of cards enter the market. That is unless NVIDIA and AMD can get rid of the majority of this inventory right now by offering price cuts and promotions such as game bundles, etc. NVIDIA, to make room for their high-end RTX 40 series graphics card lineup, is reportedly planning on cutting prices of various high-end GeForce RTX 30 series graphics cards. The new prices are expected to be lower than the original MSRPs, which these cards never sold at in their 2-year lifespan since launch and only happen to be selling now when the new generation is on the verge of launch. The new MSRP, or the original MSRP of the 3090 Ti, was $1999. Now it'll be $1499. The 3090 original MSRP was $1499, and now it's down to $1299. I think that needs to come down further to $1,000 personally. The 3080 Ti at $1199 is now down to $1099. I think that should go down to like the $799 mark, but you know, it is what it is. The 3080 is going to be 12 gigabyte is going to be down to $799. And the 10 gigabyte, which I think is going to be better, obviously, from a mining perspective, is going to be $699. Then so that pretty much wraps it up. They go ahead and cover, of course, the pricing by talking to us about it. They do say at the same time, we don't want to force anyone away from purchasing these graphics card lineup. We don't know how well the supply is going to be for the 40 series. As we saw with the GeForce RTX 30 series cards, NVIDIA had a tough time dealing with scalpers, and the same could very well happen at the start of the 40 series launch. Whether NVIDIA and its retail partners have proper precautions in place to deal with scalpers this time remains to be seen. A very important video about the situation is published by Jay's 2 Cents, which you can see below. All major US retailers such as Best Buy and Newegg have currently listed the high-end 30 series graphics cards at the new MSRP, as you can see below. In fact, the only place where the new prices aren't mentioned is NVIDIA's own store, but it makes sense. I don't know what's going on here. Let me see if I change this up a little bit real quick. Okay, so we changed the USB plug. Maybe something weird's going on with my computer as far as that goes. Let's figure out. Yeah, it was working, but I had to do a little bit of a shift, and I apologize. When did we cut out? At the pricing? We were just wrapping up on the pricing, right? I think that's what we were doing. Basically, all I was saying is right now with the price cuts, we are starting to get to that peak opportunity stage of being able to purchase for prepping for the next bull run. Of course, the best idea is probably, at least in my humble opinion, what I'm going to be looking at, not financial advice, is going to be purchasing sometime maybe around the launch of the 7000 series and the 40 series. That being said, we're already starting to see 5700 XTs on eBay go for under $250, which is pretty incredible as those come down even more, especially with their efficiency on even things like Beam now, which has pumped. And that one's an interesting one. We were trying to figure out yesterday why it pumped, and I think I have a better answer for you guys. We did have a clip of this already on our secondary channel because I try to get the news out as quickly as possible. But as announced earlier, Beam has successfully completed its fourth hard fork. The hard fork completed at block height of 1,820,000 and integrates Beam blockchain with an IPFS storage. It enables high-frequency transactions and introduces the decentralized dApp store. No consensus was changed. This is actually quite a bit of interesting stuff going on with it, and it will be the only NFT marketplace that is secure and private, which is really interesting. So when we take a look at Beam and what they started to accomplish from a development standpoint, it's looking really, really good. I really like the IPFS storage. If you want more details and the entire article, please check out the clip from the Twitch channel that we posted earlier this morning for you guys, because we already kind of covered it as far as that's concerned. Now, another interesting development within the NFT market space that also involves yet another proof of work coin is Vlepo and Tokul is what it's going to be called. They're making NFT rights legally enforceable in the real world, leveraging Komodo. Now, Komodo is a very interesting project because Komodo is what I've been building Soakcoin on. And that is because you can kind of build like parallel chains and essentially have the security from Komodo on your chain when you're starting up a coin. And that's really, really cool. And they also offer additional algorithms right out of the bat if you want to play with them. But this is a little different than that. So that's a side note, but I do like Komodo is essentially what I'm saying. A long-standing problem confronting the blockchain world and NFT owners is the distinct lack of contractual clarity and legal rights in the enforcement of digital asset transactions. Today, Vlepo and Tokul have successfully conducted a breakthrough digital procedure that will pave the way for blockchain industry and NFT owners to establish and enable their legal rights embodied in the NFTs and digital transactions to be made legally enforceable in the courts of law around the world. In June of 2022, Vlepo developed a blockchain contract management system, CMS for short, that enables NFT owners to create a digital contract by embedding their NFT's on-chain ID directly into the blockchain record of the same digital contract. This seemingly simple digital procedure, however, has massive groundbreaking significance for the digital world. Through this process, the NFT can now act as an immutable evidentiary anchor for the digital contract, forever linking the two together. This link is readily observable because Vlepo's blockchain system called Alicides, which is a customized fork of the Komodo protocol, is both public and permissionless. Once again, like you can go fork Komodo yourself and you can still maintain the security on your coin utilizing Komodo. It's very, very cool. And that's probably one of the reasons they went with it. It's very easy to spin up too. The Vlepo solution has for the first time finally addressed the long-standing concern of the blockchain industry and NFT owners about the lack of clarity on the legal enforceability of smart contracts as related to NFTs. That Vlepo has developed a solution is most welcoming, as well as providing a great sense of relief to holders of valuable NFTs. For a contract to be legally enforceable, it needs to fully satisfy the elements of 1, offer, 2, acceptance, 3, consideration, and 4, capacity of the parties to contract. And finally, 5, an intention between parties to create and be bound to legal relations. The first 3 elements are satisfied by any smart contract. Legal issues arise, however, when attempting to demonstrate that both parties intended to create legal relations and/or have the capacity to contract. This is because current smart contracts in isolation are incapable of definitively confirming that these qualitative elements of a legally enforceable contract have been met. Therefore, it is common practice for smart contracts to be accompanied by a separate natural contract. By comparison, a digital contract or smart contract executed in the Vlepo CMS, where the ID of the NFT is embedded into the blockchain record of the contract, ensures that the link between the NFT and the underlying contract cannot be broken. The Vlepo solution is blockchain agnostic, as this unique solution delivers legal enforceability enhancement to NFT owners, regardless of whether the NFT is on Ethereum, Polygon, Solana, or any other blockchain, and that's pretty cool. Furthermore, because of the Komodo's protocol superior design and lack of resilience on gas-style transaction fees, Vlepo CMS can accommodate even the highly complex contractual arrangements in an affordable and efficient way in comparison to other popular protocols such as Ethereum. Being blockchain-enabled, Vlepo can provide further additional value-added services to users such as payments, escrow, and blockchain-governed dispute resolution. Essentially everything needed to execute and settle contracts. Chris Sloan, chair of the emerging companies team at U.S. legal firm Baker Donelson, said the concept of, for example, embedding an NFT of a song into a Raptorium contract that defines a user's rights with to that song is a nice marriage of the benefits of an NFT in terms of being able to track the distribution of digital asset like that with traditional contract law during a panel discussion held on Thursday 7th following the Vlepo and Tokel demonstration. During the same panel, Jesper Nielsen, associate partner at Focus Advocator, wow, spelled all funny, highlighted the disconnect between the desire and positivity in the EU to embrace blockchain solutions for IP in action, referencing the 2019 Blockchain Now and Tomorrow European Commission report, stating, "But we, the EU, are moving slowly because that was in 2019 and now we are in 2022. And as far as I know, there hasn't been any major leaps forward when it comes to recognizing some of these applications." That's blockchain and IP. Through the Vlepo CMS, a solution is now available to effectively manage the gap between the digital asset world and the current legislation. Peter Coco, Vlepo's CEO, remarked, "It has been a long slog, but it is a big delight for the Vlepo team to be able to savor the sweet smell of success. At long last, the problem that has posed a challenge to the blockchain world and NFT owners concerning the distinct lack of legal clarity and legal rights in smart contracts is finally resolved. We would welcome the opportunity to help all blockchain companies and NFT owners to enhance their existing digital and smart contracts, as well as their NFTs to be recognized as legally binding contracts in courts of law." Peter will be at the DMCC Free Trade Zone in Dubai to meet with partners and investors in mid to late July to discuss the potential universe of applications of Vlepo's technology and the next steps in helping owners of NFTs and other digital assets to unlock and monetize their value. Vlepo was founded in 2018, which was during the previous bear market, and it's a Web3 blockchain solution provider. Its applications have been focused on developing a blockchain integrated suite of business tools for freelancers, SMEs, and enterprise. Tokel is a platform that uses unique NSPV technology to deliver simple, fast, and easy to use blockchain NFT and token creation system. And you can go to tokel.io for more. And Komodo is a community-oriented project consisting of customized versions of Bitcoin protocol known as the Komodo protocol, as well as a blockchain running on the Komodo protocol. So I think this is really big news from, of course, the perspective of NFTs and I'm really excited to dive into it more. Obviously, being able to legally enforce NFT ownership is going to be extremely important here in the coming future. So definitely check it out. Now we have some coin updates going on, proof of work coin updates. The first one's going to be from Firo. And just here in the morning, we kind of had a pump of Firo. Now they showed the original one on their Twitter, and then they're just trying to get the community to go ahead and join them. It's up now 274% to $5.46 a pop. And this is really, really interesting because frankly, the tokenomics recently changed on Firo. And there's been this kind of sentiment from Firo that miners drive the price down. And this is primarily due to the fact that miners liquidate. Now, with all the selling pressure that's going on, this has been a noticeable problem across the market. In fact, even affecting Aneta BTC and their governance token on Ergo. And I talk about that with the Aneta team and of course the GetBlock team in the video that'll be posted at 6 p.m. Central Time later tonight. So I wanted to bring that up because I think that topic basically applies here, because that is what Firo is going to be pointing to, I think, for this initial price bump, because they aren't really talking about much else, right? So they are essentially, they have basically their history here in this thread. There's not like a huge announcement that's necessarily going on here. It's also really interesting that they say that their friends at the Ergo platform also modified Zero Coin to power their zero join privacy mechanism. So they are talking about Ergo as well. They're also talking about Beam. So this is where things get really interesting. Out of all of these kind of zero coin layers and stuff like that, we see the pump from, or we saw the pump from Beam yesterday. And then today we're seeing a pump from Firo. Boy, wouldn't it be cool if we got a pump from Ergo as well. That would be absolutely incredible. So let's go ahead and move on though. This one's interesting. Raptorium has doxed themselves and incorporated via a vlog post to basically promote something called Feathered, which is their corporation. That's their incorporation. And basically saying like, these are their huge aspirations. I did cover this already as well on the Twitch channel last night. So, you know, if you want the most up-to-date content, I'm streaming and making content 24/7 over here to make sure everybody's up to date. But they say right in here, the Feathered Corp is created by the Red Team Miner, or Red Team Miner, why did I want to say that? The Raptorium core members, Paul Mills and David Morris. Quite crazy. And they even give you their online persona names, and was needed in order to move forward with progressing major Raptorium partnerships with some of the largest exchanges in the world, requiring the Raptorium project to have permanent base. Now, obviously, we're talking about Raptorium. We're talking about kind of a couple different points of view here. One could be, of course, no, you don't want to dox yourself. You want to maintain privacy and anonymity for blockchain projects. You don't want some, you know, head of whatever project it is. You don't want incorporation, that sort of thing. On the flip side of that, if we're looking at like institutional adoption, exchange listings, and so on, this makes it easier for them to get exchange listings and get that big institutional investment. So an initial price pump could be expected, obviously not financial advice, but we could see a pump in Raptorium. That being said, going to like kind of back to like the principles of crypto and like how I feel about it, I'm not really too sure. I gave you the negative and I gave you the positive. Usually when people dox themselves like this in the lead of a project and they incorporate like this, it's clear that they have now, you know, given into some form of centralization. You can check out my video on it for a little bit more detail. We're going to be talking about now, Texas Bitcoin miners are getting paid to shut down. I'm not getting paid to shut down because I'm not big enough, but at least I don't have to pay electricity. We did shut down on Monday. because it's hot heat out here. This is coming from Fortune. It says temperatures in Texas shattered century-old records over the weekend as blistering heat. Come on, Fortune. As blistering heat wave baked the Lone Star State under triple-digit heat. With temperatures reaching 110 degrees Fahrenheit in central Texas, the state's grid operator issued a warning Monday that rolling blackouts were possible in coming days and urged consumers and industry to scale back power usage. Bitcoin miners, which flocked to Texas in 2021 after China banned the industry, have heeded the call. According to Lee Bratcher, president of the Texas Blockchain Council, nearly all industrial-scale Bitcoin mining operations in Texas have shut down their rigs as of Monday. So you guys remember, like, Texas had a grid problem. Bitcoin mining comes in. It requires more infrastructure. They build up the infrastructure. Then when there is a huge, basically an unprecedented requirement for power in the state of Texas, the Bitcoin miners were able to shut down. No rolling blackouts happened. And this is why Bitcoin is important to the grid. And we've talked about this a lot before. If this happened and the infrastructure was the same as it was during the 2020 winter storm, I think we would have seen rolling blackouts, because this is, once again, an unprecedented time in the amount of heat that's happening in Texas. According to Lee Bratcher, president, okay, so we got that far. Bratcher says that's equal to 1% of Texas total grid capacity. Texas Bitcoin miners have powered down during previous crises, such as when a winter storm gripped the state in February. Reducing demand from power-hungry Bitcoin mines freed up power supply for more life-giving services like heating. We are proud to help stabilize the grid and help our fellow Texans stay warm, Nathan Nichols, CEO of mining firm Raptorium, wrote on Twitter at the time. But miners aren't switching off their rigs just to be altruistic. Economic incentives are driving that decision. Grid operator, the electricity, or ERCOT basically, brokers demand response agreements that pay industries, including some Bitcoin miners, to downsize operations during times of peak demand to provide more energy to the grid. For Bitcoin miners, which can power operations on and off with a flip of a switch, taking ERCOT's payout rather than continuing to mine Bitcoin during times of tight power supply makes a lot of sense. Bitcoin mines are only profitable so long as the cost of energy they use remains below the value of Bitcoin gained. That calculus is what miners seek out, or is why miners seek out jurisdictions like Texas, where electricity prices are relatively low. But a weather-induced spike in demand across the grid inflates the cost of electricity and reduces profitability for Bitcoin miners. According to energy management service firm Voltus, a miner can generate up to 10% of its annual revenue by providing shutdown services to the grid. With Bitcoin's value in a slump, it's probably better for miners to take the paid holiday and shut down while the sun is high. And that is a very good point. I mean, this is great for miners in Texas, because shutting down when it's hot, it's hard to run the rigs, right? You're kind of burning up your rigs. It's very hard to keep them cool, especially with these temperatures hitting this high. And then you just take a payout and you shut off for a little bit. You stabilize the grid. Everybody works together. Everybody sort of wins. It's the perfect situation. You know, nobody's experiencing rolling blackouts. It's great. So I really love to see, you know, basically this happening right now, because it just proves the point that cryptocurrency mining is good for the power grid at the end of the day, if it's done correctly. And these incentives are in place to help people do it correctly. And those incentives can go not only from this kind of stabilization of the grid, but it can go into helping the industry shift into renewables, provided the incentives are there for renewables, thereby, of course, reducing emission rates and actually providing renewables to a wider portion of, you know, the world in general. Embattled crypto lender Celsius files for bankruptcy protection. Now, we did cover this one already, but crypto company Celsius has filed for Chapter 11 bankruptcy protection. Earlier, CNBC reported the company's lawyers were notifying individual U.S. state regulators of those plans, according to a source who asked not to be named because the proceedings were private. Celsius made headlines a month ago after freezing customer accounts, blaming extreme market conditions. Now, a lot is going on here. They've released another statement to the Celsius users announcing the bankruptcy. We've seen similar announcements, not from bankruptcy side of things, but the way these companies will respond in bankruptcy, which is that the crypto is not your crypto. And that is kind of your fault if you did invest in these platforms because you did not control the keys. So once again, we're going to say it and just kind of, beat the dead horse, but I feel like we got to do it every time. Not your keys, not your crypto. That's very simple. If you have not memorized a 12, 15, or 24 word seed phrase or taken that down and put it in a safe, if you have not done that, it's not your crypto. Okay. That is it at the end of the day. And this is why stuff like this that happens, you can't extract it. They'll use it to solve their debts and it'll just keep going down. It gets worse too. We have more information from them. Celsius mining unit files for bankruptcy just months after announcing IPO intention. So Celsius Mining is done. Celsius Networks mining unit, which said in March it planned to go public, filed for Chapter 11 bankruptcy protection along with its parent company in the U.S. Bankruptcy Court for the Southern District of New York. The mining unit of the troubled lender said in March it had filed a confidential S-1 draft registration with the U.S. Securities and Exchange Commission to take the company public. At the time, shares of most publicly traded crypto mining companies were tumbling with the broader market sell-off. Fast forward to summer, with the continued bear market, miners were forced to sell their mined Bitcoins to pay for their operating costs, and some industry participants expected a lot of miners to turn to M&A to survive the downturn, and some faced debt crises. Celsius Mining's bankruptcy filing is likely to be another blow to investor sentiment in the mining sector. Celsius Mining's IPO process wasn't a successful option as investors couldn't get past the possibility of litigation risk while the parent company paused customer withdrawals and faced bankruptcy, according to a person familiar with the mining unit's IPO process. The unit also faced similar investor sentiment while seeking potential rescue financing, which would bail out the miner if the IPO fell apart, according to the person who didn't want to be identified. Celsius Mining has been active in the industry via investing in lending as well as helping host the miners to which it lends. In March, Bitcoin miner Mawson signed a 100 megawatt co-location and a $20 million debt deal with Celsius Mining. Last year, Celsius Mining said it invested a total of $500 million for its Bitcoin mining operations in North America. Another one bites the dust. This isn't necessarily a bad thing for the network in general because it does mean less hash rate on the network, which means the current miners will be able to reap those rewards and have higher margins, provided the price of Bitcoin remains the same. And that is something we are going to talk about here in a second because it does get interesting. That being said, we have one more crypto miner in the news, and that is going to be CleanSpark as they continue to take advantage of bear market as it scoops over 1,000 rigs. This is a miner that's doing good. CleanSpark. What are they doing? They're taking all the rigs off of people that are shutting down. Crypto miner CleanSpark has bought 1,061 Bitcoin mining rigs that are already in operation at hosting firm CoinMint's facility in New York. While the move only adds 93 petahash per second to CleanSpark's 2.8 exahash per second hash rate, a measure of computing power on the Bitcoin network, it is indicative of how the miner has been able to scoop up discounted opportunities amid a bear market. They are taking advantage of these opportunities that we're talking about. 1 exahash is equal to 1,000 petahash. The Las Vegas-based company bought the WhatsMiner M30S machines at a substantially discounted price compared to the spot market price from just a few months ago, according to a statement emailed to CoinDesk. In June, CleanSpark bought purchase contracts for 1,800 Bitmain Antminer S19 XP computers from another miner that wanted to offload the contract, likely due to cash issues. We are seeing unprecedented opportunities in this market, CleanSpark CEO Zach Bradford said in a statement. Bitcoin miners have seen their margins slashed as power costs are surging across North America and revenues are dwindling along with the price of Bitcoin. And obviously that is something that we have to talk about, the price of Bitcoin. And when we talk about the price of Bitcoin, we have a lot of different factors, but one of the primary factors where you always end up hitting a base, right, is going to be the price of the price to mint a new Bitcoin. So to go over that whole process again, Bitcoin mints new Bitcoin through the mining process. When a block is submitted to the chain, a miner goes out and solves that block. It is rewarded with not only transaction fees that the actual consumers that are trading the Bitcoin are paying, but also with newly minted Bitcoin. This number is cut in half every 4 years, about, give or take, based on what is known as the halving cycle. When this happens, the amount is reduced by 50%, and that obviously increases the cost of production for Bitcoin. This is what you want to be paying attention to, because it is much more indicative of what will happen in a bear market than it is of what will happen in a bull run. Now, a traditional retail investor that comes in and looks at Bitcoin will see that initial pump after the halving that's due to the price increase influenced by the miners of the reduced production of Bitcoin and how much their electricity costs are. And then they'll say, oh, look, Bitcoin's going up. And then they cause this huge euphoria pump to where really Bitcoin was inflated well beyond what it was actually worth or what it actually cost to mint. For example, about $60,000 to $70,000 when the actual price to mint Bitcoin at the time was around $22,000. Now, there are other factors like, of course, difficulty on the network. And depending on the margins that the miners are willing to go into, it could, of course, influence the price of Bitcoin to come lower and lower. And as more large companies get invested into Bitcoin mining, it will shift that. But Bitcoin production cost has dropped to about $13,000, JP Morgan says. Why is this important? That gives us a new bottom for Bitcoin. Because our average price to mint a Bitcoin was around $22,000. Now we are seeing it a lot lower. And that does mean that you have this potential to have selling pressure from the miners all the way down to 13K. Declining production costs could be seen as a negative for Bitcoin prices, the Wall Street Bank said in a report. The cost, and this is not an ASIC miner for Bitcoin. These are GPU miners for Ethereum. Come on, CoinDesk. This is what you do for a living. Get your pictures correct. The cost to produce Bitcoin has fallen about $13,000 from around $20,000 at the start of June as miners battled the bear market and efficiency in mining rises, according to investment bank JP Morgan. The drop in Bitcoin's production cost stems from the decline in electricity use as proxied by the Cambridge Bitcoin Electricity Consumption Index, while the hash rate has been fluctuating in recent months with no clear downtrend. According to JP Morgan strategist led by Nicholas, not going to even try to pronounce that. We'll call him Panny. While improved profitability means there may be less pressure for miners to sell their Bitcoin holdings for liquidity purposes, the drop in production costs could be viewed as a negative for overall Bitcoin price, JP Morgan added in its note to clients. The decline in the production cost might be perceived as negative for the Bitcoin price outlook going forward, to the extent that production cost is perceived by some market participants as the lower bound of Bitcoin's price range in a bear market. And it's interesting to see traditional finance catching on to this. JP Morgan went click and they see it now. They see what is influencing the price of Bitcoin. They say some people see this, but it is true. This is something that happens in a bear market especially, which is the price to mint Bitcoin is really going to be your bottom price, your bottom low. So the new low for Bitcoin right now, as I see it, is going to be around that $13,000 mark. Not financial advice. I do not know if it will actually crash to that. We also have obviously CleanSpark performing some M&A and getting some more rigs online. The more rigs that come online, the higher the difficulty of the network will get, and thereby, of course, increase the cost to produce a Bitcoin, which will fluctuate. This is an ever fluctuating number, but it's something to pay attention to, especially once you start getting into a bull run, because once you start getting into a bull run, right after that halving, you should be paying attention to how much it costs to mint a Bitcoin, because that's going to give you an idea of when you should start DCAing in and out, right? And that is really how that really will help you kind of start to judge the market in general. And that's going to be macro, right? Not micro. We can't ever predict exact dates, times, anything like that, but we can kind of see this macro effect across Bitcoin. And it does bring up an interesting kind of concept here too, because Bitcoin's kind of up over that $20,000 mark, right where we would originally expect it. Like I said, Ethereum, I've always said like this bear market would sit around 1100, Bitcoin would sit around 20K. Now, obviously we're going to be shifting those, but when we talk about the Bitcoin and its hedge against inflation, it's interesting to point out that our CPI was way high at 9%, and Bitcoin hasn't really dipped in relation to that. Now, all the cost basis stuff that's going on, it hasn't really applied yet. There are other things that could drive it down later as far as the rest of the economy goes and so on. And I'm not an economist. I can only really give you guys the information on specifically the halving relation and the mining relation and the power and the cost and all that. That's kind of where my wheelhouse is. Greater economic effects to Bitcoin, though don't seem to be as impactful as maybe initially reported because of this weird timing between the I guess the beginning of the recession or whatever we're going to be calling it these days, and the natural halving cycle of Bitcoin, right? They kind of coincided, but I think this would have happened to Bitcoin and we would have been at these levels regardless of the economy is what my point is. But the $863 billion crypto market may be close to the bottom, Mayer multiple suggests. So there is someone saying this is close to the bottom. The market likely bottomed out in June with Mayer multiple dipping below 0.5. The Mayer multiple, which measures the difference between an asset's going market value and its 200-day simple moving average, suggests the crypto bear market has run its course. At press time, the Mayer multiple was 0.53, meaning the crypto market valued at $863 billion was worth almost half of its 200-day average of $1.6 trillion. The metric fell below 0.5 last month, with the market value hitting a low of $762.8 billion. The previous crypto bear markets ended with the Mayer multiple falling below 0.5. If history is a guide, the market may have found a bottom at the June low of $762.8 billion. Developed by Bitcoin investor and podcast host Trace Mayer, the Mayer multiple helps investors identify oversold and overbought conditions by comparing the market value to the 200-day SMA. The assumption is that the market would bounce back or pull back its mean represented by the 200-day SMA after extended downtrends or uptrends. In the past, 0.5 or below readings have marked bottoms. In contrast, readings above 2.4 have signaled the final stages of the bull market, characterized by retail investor frenzy. The 200-day SMA is one of the most widely tracked gauges of long-term trends. As per technical analysis theory, an asset is said to be in a bear market once its value drops under the 200-day SMA and vice versa. There we go. When prices trade below the 200 DMA, it is often considered at the 200-day AMA. MA. Wow. Okay. Moving average, which is daily moving average. It is often considered a bear market. Blockchain analytics firm Glassnode's report dated June 24th said when prices trade above the 200 daily moving average, it is often considered a bull market. The Mayer multiple is not the only indicator signaling an end of the bear market. Recently, on-chain indicators such as the Puell multiple and the MVRVZ score and long-term moving average crossover have flashed similar signals. However, past performance is no guarantee of future results, more so as Bitcoin, the leading cryptocurrency by market value, was evolved into a risk-on asset since the crash of March 2020. Therefore, the entire crypto market is more sensitive to factors like the Federal Reserve's monetary policy and inflation than it was during the prior bear markets, except it really didn't feel like it this time. The U.S. reported inflation at a new 4-decade high of 9.1% on Wednesday, spurring bets of a 100 basis points rate hike later this month. The crypto market valuation has declined by 70% since November, predominantly on fears of faster liquidity withdrawal by the Fed. So which article do I kind of lean towards here, right? Like you guys probably want to know, do I feel like our new low is 13K Or do I feel like we hit the new low or already? And this is where, things are going to get a little interesting, because this article is suggesting that we are going to be out of a bear market now or sometime around now. And I have to say, I don't agree with that. I don't think, like, if I look at the history of Bitcoin, if I pay attention to the importance of the halving cycle, I don't see that happening until 2024. So sure, we have outside influences, but like I said, some of these outside influences, like inflation, seem to just have been well timed with, of course, the halving cycle causing the bear market in Bitcoin. So not financial advice, but I am still thinking a more long drawn out winter for cryptocurrency, for Bitcoin especially. I feel like we sit around these levels. Obviously, you do have the selling pressure from the miners, possibly pushing it down lower to 13K for the new floor, right? That's a possibility. This is all from a mining perspective too. Remember, this is what we do on this show. We don't do any of this 200 MA. So this is my analysis from the mining perspective. The new low could be about 13K on Bitcoin, according to just pricing and how much it costs to mint it. And that number could shift, of course, with the difficulty of the network going up. That's a possibility as well. And then we wait for the next halving of Bitcoin before we start to expect another bull run in Bitcoin to come out of it. I could be completely wrong, but this is what I would kind of basically how I would analyze it in general. And if we really look at inflation, it's pretty crazy too. Here's the top, or all the countries that are over 15% inflation, and it's absolutely insane. So if we're talking about inflation and Bitcoin, like Bitcoin remaining the same price as compared to the US dollar right now, when we start to see inflation rates like that, bodes well for cryptocurrency in general, in my humble opinion. But I wanted to show you guys this chart because, we keep getting we keep getting people saying like inflation is not a thing. It's not happening. It's clearly happening, and it's happening worldwide. So pay attention to it. That is where we're at. Let's get into mining profitability right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. All right, welcome back everybody. So I got to kind of bust through this, but I did want to say thanks for the $1.99 super chat sticker from James Ferguson, and thanks for becoming a member for 3 months, Bohick Mining. You guys helped keep the dream alive during this bear market. So what did I do? I did something crazy. I'm solo mining. I'm solo mining Beam. It looks like some rigs are actually offline. We are at 1.4 kilohash a second. Last night, you can see our average hash rate is 1.15. We've only been live since 6 p.m. yesterday. So we have another 6 hours to go for today. And we have found 6 blocks, which is the equivalent of 44.83 a day. That's pretty awesome revenue right there, because I do have some workers solo mining Erg, which may not be the best because we're at 11% luck on there. We're at 90% luck. Our luck has dropped a little bit on Beam Solo, but that is the equivalent of 44.93. We'll be covering more of that later once we get some 24-hour averages and I get some more rigs online, because apparently we have some offline. It's hot outside, so it is what it is. I'm still kind of tweaking also the way it works. And then I got, an average hash rate of 3 gigahash a second on Ergo Solo, but as you can see, the current hash rate is 2.41. It's getting really hot out there, and that's kind of like how this functions right now. I'm just doing solo mining because, frankly, the Ethereum mining is so trash that I can't really make any any profit anyway, so why not gamble at this point, I suppose. We'll be talking more about that later in a video as I get closer to it. Let's take a look at what to mine though. And then obviously for what to mine, we have to update the ZIL hash to 110. We have the Kapow at 60. We have ProgPow at 60 and Firo proof of work at 60 megahash a second. If we calculate that out with 10 cents a kilowatt hour power, obviously with the pump in Firo, we are seeing a huge increase in profitability. $2.62 a day in revenue and $1.87 a day after power. Neoxa comes in second at $2.43 a day in revenue and $1.63 a day after power. Kind of not terrible for us to look at Neoxa in comparison to Firo, because obviously the amount of hash rate going on to Firo right now is absolutely insane. Ethereum at $2.13 a day in revenue and $1.36 a day after power. Ravencoin $1.99 a day in revenue and $1.20 a day after power. Sarah $1.91 a day in revenue and $1.11 a day after power. Conflux $1.74 a day in revenue, 95 cents a day after power. Flux $1.64 a day in revenue and 94 cents a day after power. If we scroll down, we got Ethereum Classic at $1.33 a day in revenue and 56 cents a day after power, and Ergo $1.29 a day in revenue and 66 cents a day after power. If we look at mining pools or mining hash rate on the networks, let's take a look at Bitcoin, and it's still sitting around 214 exahash a second. The big one, obviously, for proof of work that we're wanting to look at is Firo, and you can see this massive pump in Firo hash rate. So be extremely careful with Firo, because at this point, obviously, you are going to have some pretty intense competition. As you can see right here, this huge spike in difficulty has already responded, going up from 1.8K to 14K. You basically, so about 2K to 14K, that's a 7-fold increase in difficulty that just happened on Firo. Now that is due to the price increase. Is the price increase 7-fold? No, it's about 300%. So it's about 3-fold. So be extremely careful. Now I say that as I had, basically done exactly the opposite on Beam from the Beam pump yesterday. But what was going on with the Beam pump though too, is that I went ahead and did solo to kind of hedge against that, which is what I was working on. And now the price is down on Beam. But, that is kind of the risk you run when you YOLO into these sorts of things. And we'll be talking about that too when we kind of analyze this move over to Beam, right? That's kind of the point. Let's take a look at more networks though. I think we have to look at Beam right now. It's at 323 kilohash a second. Some hash rate is dropping off as people chase the dragon. Let's take a look at Ethereum. Ethereum is at 911.5 terahash a second. Not too different from what we would expect. Ethereum Classic probably at 24 terahash a second. Boom, called it. Let's take a look at Ravencoin, which is going to be at 2.37 terahash a second. Let's take a look at Neoxa, because I would assume people moved off Neoxa. No, I'm incorrect. Neoxa actually went up in hash rate to 138 gigahash a second. I was expecting people to be moving off of Neoxa and going over to Firo. That was kind of what I was thinking, but I guess I was incorrect. And there you go. That's why we check this stuff every day. I do want to check Raptorium, because that one's an interesting one. Are we seeing a bump thanks to their announcement? No, we are not. They're at 56 megahash a second. Did we see a bump in price for Raptorium based on their announcement? Not great. About a 5% bump in price thanks to their announcement. So really that's kind of where you're at as far as this goes. Let's take a look at mining pool profitability. For the last 90 days, Ethermine in first, Crazy Pool in second, Mining Pool Hub in third. For the last 60 days, ZET in first, Crazy Pool in second, Ethermine in third. For the last 30 days, ZET in first, Crux Pool in second, Ethermine in third. For the last 21 days, Mining Pool Hub in first, F2 Pool in second, Crux Pool in third. For the last 14 days, Mining Pool Hub in first, F2 Pool in second, Hivon in third. For the last 7 days, mining pool hub in first, F2 pool in second, Hivon in third. For the last 3 days, mining pool hub in second, F2 pool in, or mining pool hub in first, F2 pool in second, Hivon pool in third. And for the last day, mining pool hub in first, F2 pool in second, and Hivon pool in third. Hivon's an interesting one because during a bear market and without like huge fee increases, that PPS Plus can be beneficial. You can also see that that's happening on F2 pool as well. So something to consider for a more stable income. Taking a look at ASIC mining profitability, the Antminer E9 still in first, but not quite released. I believe it's tomorrow the shipments start happening. That's what the industry insiders tell me. Antminer L7 at $20 a day, still taking kind of the first for released rigs. KD6 at $15 a day. And then the KD5 still under $10 a day at $9.62. If we take a look at the S19 Pro, it has come up in profitability to $4.26. Let's take a look at BT miners and see if we have any sales going on. You can check out the affiliate link down below. But what do we got as far as sales, which would be the question? They just got some combo deals. Some sales are listed here though. S19 Pro still 4,300, S19 down to 3,500, and the T19 down to, which is 84 terahash, down to 2,800. So there's some of the sales there. They do have some interesting combos, like a KD box with an iPolo V1 Mini, and that's kind of interesting out of the box for 3,600. You can get a V Mini and a V Mini Classic, which will do Ethereum Classic, for 2,900. And you can get the iPolo V1 Classic at 1.5 gigahash a second with a KD box for 8,200. So some interesting deals going on there if you guys want to check them out. So as far as questions and answers, I can't get to them today because we do have jiu-jitsu to get to, and I'm already probably going to be running late, which means I have to do push-ups, and I really don't want to do push-ups, but it is what it is, and I pay my dues. So I'm going to get the workouts in. I do have a couple meetings, so let me take a look at this real quick. I have a couple meetings going on here. Let me double check. I have one meeting at 3 p.m. Okay, so I have one meeting at 3 p.m., which isn't bad. So provided everything is going correctly, we should have a supporters only live stream on locals, taking a look further into Beam Solo, etc. on sonofatech.locals.com at 4 p.m. Central Time. And then at 5 p.m. Central Time, we will go live on twitch.tv/blindrun. I've been playing the Cycle Frontier. If you have some news information that you'd like me to react to, go over there. We react to everything. It's very fun. I want to thank everybody that has been supporting the channel through this time. Obviously revenue on YouTube is down, not by way of necessarily y'all, like our numbers are getting back up there over the 300 concurrent viewers a day, which is expected. You know, we're hitting our numbers kind of on our dedicated videos still, but the CPMs are dropping because obviously advertisers are not paying as much for their cryptocurrency ads. And that's one of the big downfalls there. So I am struggling as far as like figuring this all out, but we're going to keep going. I'm also talking to some new sponsors that I think you guys will be interested in, non-cryptocurrency sponsors, which I'm really excited about as well. And we also have giveaways coming to sonofatech.locals.com and new review units coming in thanks to Coastal Mining, which if you go to their website, you can utilize the code SOAT for 5% off your purchase, which can really add up on these ASIC miners. So that's pretty much the entire spiel. So Queen of Random says, do you think the Celsius account holders will get anything back from their locked coins? That's yet to be seen. You know, it'll have to go through litigation. At this point, though, like obviously their goal is to not pay that and to just pay down their debts. They also moved a bunch of their Ethereum to an unknown wallet. Battlefish says, good luck on Beam. We've had good luck so far, so I've been pretty happy about it. And Detroit Irish says, what are you doing? Don't be dropping Beam hints. You haven't paid your electric bill yet. Hey, shh. Oh, it's all good in the hood, boys. Thanks for watching. Be sure to hit the like, comment, subscribe, and notification bell down below. I share all my moves with you guys as much as possible. Now it is a little delayed. The earliest moves will be over on, of course, sonofatech.locals.com. But I appreciate you all. We'll see you next Tuesday.